Good morning, welcome to First Class International Trading Signals channel, trading the right way wherever you are. My name is Jess and I'll be your host today. This is a weekly educational program segment and it'll be candlesticks today. We are in week 6. Please do not forget to subscribe to my channel with the link at the bottom right. This will keep you up to date all the time wherever you are. You'll also get a reminder at the end of the program by the logo, so please do click on that to subscribe. As always, I hope you're in profits with the weekly trading signals and your trading or investments are in good shape. You will find playlists at my handle, which is at FCITSC all the time. This means you won't miss any key areas and you can catch up halfway through, back end of the week if required. Remember, at the end of each program, usually when I'm presenting the trading signals, they're always posted at the end for your consumption, but today, as the program's just educational purposes, that will be the case. Remember, all my weekly signals are free of any charge and in niche product areas. All my trading signals are produced by me, 100%, and no third-party involvement in any capacity. There is no computer-based signals or any lithogram or, like I said, any other third party. So before we waste any more time, let's get into the topic today, which was candlesticks. Yeah, just before we begin, there's this notice here. The week 6 programs schedule will be released with week 7, which is on 1st of July. So that's a correction there. I do apologise for earlier on. I mentioned. We were in week 5 as we speak, and not week 6. So the week 6 program will be presented with week 7, which will be on 1st of July. So that's just a correction there. Okay, so let's get into the candlestick trading guide type of candlesticks on. So we'll be doing I'll be doing several education programs in this area as we go along. It is a complex area, so it will, as a beginner, you might find some things complex, whilst if you're up and running, you might find it a standard. Okay, so candlestick trading. So basically, candlesticks, it was invented by a Japanese. So, for example, we've got the stock market opening at 8 a.m. in the morning. It opens with an open price, a high and a low for the day, and it has a close price. So basically that's what the candlestick shows. As I'll describe to you later on in the program, it just shows all the data for the day. It's used commonly around the world by financial institutions, banks, trading, brokers, private traders, etc. Before we get into the charting or the first candlestick, I just want to make you aware that the bullish and bearish candles are like plus and minus, so it's simplicity. So it's blue is plus and red is minus. So it's bullish and bearish. These are the candlesticks I will always use on my examples or when I'm using the trading platform or any screenshots, etc. You're free to use black and white candlestick, red and white, or green and red, any colour variation you want. But remember, you make profits on buying as well as selling products or investments. That's not the same thing as bullish and buying candles. Bearish candles, it's two separate things. Another example is with this candlestick. Basically, say we've got a period. Period could be 1 second, 15 minutes, 30 minutes, 4 hours, 1 day, month, yearly on a candlestick. So, say for example, on the daily candlestick, so 10 points up on a bullish candle, which was $10. So that would make a 0.10% change for the day. That's just an example, hypothetically, how it look on the trading, trading charts, the description. Okay, so here we've actually got the Japanese candlestick here. So we've got a bullish one and a bearish. So as you can see, the blue, that's a blue body there, and then we've got a red body. So we've got the open prices when the market opened. So that's around here. And then we've got a close price, which is around there. And as you can see, during the day, the price, we've got a lower shadow and a higher upper shadow. So the price went down to the lower shadow, which is the low, and then it went up to the upper shadow, which was the high of the day, but it finished off in the center position. And then you can see the same on the bearish, same thing on that as well. So you've got an open and a close price, and then you've got a high for the day, which was there. It's not the close price, which was much lower. Then you've got a low and the opening price. So the open price is not the lower price because it's been down there and it's retraced back up. Okay, so these are two healthy bodies in the bullish scenario and in a bearish scenario. So I'll just show you an example now on an actual chart. Okay, so I've just got a Forex euro dollar chart up on a daily candlestick, and there we've got, as you can see, two candlesticks highlighted. So we've got a bullish one there, and it's quite a healthy bar. As you can see, there was obviously the price has moved down, it's come to a low, it's also moved to a high, but at the end of the day on the daily bar, that's where it's finished. So nice healthy candle. You can also see what subsequently happened on that daily candle. There was some more buying within that range of that high. As you can see, there's some buying attempts to push the price up. Subsequently, the price has been pushed up again the following day again, and then it's been pushed up again, and then it's reversed down. So I'll just show you a bearish example as well, which is this candlestick here. And you can see there's healthy selling there. There's been a low and a high, but it's ended up in the confluence area, which is where all the action is. So it's healthy selling. But if you look at prior to that candlestick, there was bearish signals posted after this bullish candle, and then a few days later, more and more buyers have got in. So as due to resistance in that area, and subsequently a full fullish candle has formed, whereas there's some wicks there, as you can see, shadows, and that was full of sellers. So that's a good example, standard examples. When you get a bullish bar or a bearish bar like that, it's a strong signal. It's quite good news, especially on the daily and weekly bars. Okay, so I'll just move on to the next candlestick. Okay, so the next candlestick we're looking at is long V short shadows. So we've got the same bars again, bullish and bearish with the wicks on. As you can see, we've got a smaller volume on the bearish bar and smaller volume on the bullish bar. So you can see they both formed within inside the candle, the bigger candle. So what you can see is, obviously, in that case, the liquidity is down, so there's not much buying and sellers. There's not many buyers and many sellers in the market, or the bulls or the bears, or the bullish or the bearish. So these are just examples, some of the jargon that's used on the market. So you can see there's not much on the bullish side here, and the small wicks there, so the prices attempted to go higher and it's been lower. Same on the bearish, attempted to go higher, attempted to go, but it's formed in middle. So in terms of trading, they're not quite, although the charts are indicative, they're not, points where you would make an entry unless you see healthier bar after, or other data before to make a decision with other technical analysis. So I'll just show you the example on that one as well. Okay, so we look at the bullish. Let's have a look at the bullish example. So we've got a bullish example here, as you can see there. We've got a bullish bar, and then we've got an inside bar here, much smaller bar, and as you can see, the price is rejected, gone down. It's been gone back up, and then following that bar is proceeded to an upward trend. So there wasn't much liquidity in that day, so it didn't break out. So that's what we were saying, that the short candles don't offer much of confirmation. But what you can see in another example the other way with that is that's form, and then the next day the price has checked the bottom there again, and it's bounced off and it's gone further up there. So that was the conclusive bar on that one in that example, this bar, and it's led to a bigger bar forming. So I'll show you another example here for a bearish one. Here we've got another situation where it's short, there's long shadow there, but long wick. So we've got a lot of sellers in the market, but the price has pushed up, and then we've got smaller body there, it's formed inside. So as you can see there, that's a strong sort of sell signal on the market, but that bar's still within, so the trading was within that bar. So if you're going to enter a trade longer term, it's better to wait after that bar, as I was stating. As you can see, another bar's pulled in, but once it's broken the low of that period, then it's a good sign to get in and then make a sell off that there. So there's been a pullback, and then it's gone down and it's broken out. So the easiest version is not to trade that, wait till that bottom line has broken through, and then put trade in to sell below. And we've got bearish candlestick there for you, so I hope that's clear. Just get the... So we're looking at some long shadows now. Long shadows are wick. So as I stated earlier, it's just, that's basically just a wick going up and down. So that's a long upper shadow, and then that's a long lower shadow. So we can see there in both bars, bullish and bearish, that buyers and sellers, the price have been in. So the price has gone in, it's gone up. It's gone up or down. Usually that can happen when the market's indecisive. So maybe indecisive, or buyers or sellers are running out, or the daily session, trading session, is coming to an end, or there's a news breakout that's caused the price to go up and down in that period. Which could be the daily candle. It's gone up or down, but that's how it's ended. Once again, like I said, I'll trade outside these sort of situations, as I was saying earlier on, because you want a stronger signal to form bullish or bias for the longer term signals. That's quite indecisive, but if you're trading with the trading signals and you're trading on the daily bar for the weekly, so if you're trading weekly for your trades, then a daily bar is a good entry point. So to get accurate in that, this is not ideal area to make an entry. Wait until the market's settled to get a confirmation candle and then join the market. So I'll just show you an example for the long shadows. Okay, so we've just got the CNH JPY up, and I'll just bring this trade. We're looking at the weekly bar here, so although the candle seems a bit small, we're looking at the actual weekly bar. So here we have one down here. If you can see this area here, there's a bar formed there, and as you can see, it's got a wick. And the actual bullish price movement is at the bottom of the bar, as you can see there. So it appears the price tested a high and then it's retraced back down, but it didn't go into negative territory. There was a low, then it's bounced back, and it's ended up with a candlestick, with the long wick there. And then we've also got a bearish one, similar situation, that had a long upper shadow that's got a long lower shadow, just to confirm that. Yeah, so that was the long upper shadow, and that one's the long lower shadow in that example for you. So once again, as you can see, both subsequent bars, both of them have led to the weekly chart gains. So if you were selling from that position over the next few weeks, the price has gone down. So if you were buying, price has gone up. But as you can see, there's some indecisive candles there as well, but that's a nice bar there, pushing the price low. And then you've got a couple there pushing the price up. Okay, so we'll just move on now to the next one. I hope that you've been enjoying my programs over the last few weeks. They're getting more and more interactive. I'm trying to get more and more interactive and simplify things for yourself. Okay, so now we've moved on to spinning tops. This is an indecision candle, bearish and bullish and bearish. As you can see here, in both scenarios, there's been buyers and sellers. There haven't been the wicks are not. It's not filled up. A candlestick over 50, 60, 70%, 80%. You can see the price has been high, low. It's been everywhere, but it's ended up in middle. The market's undecided, just a few points, a few points each way. So these are indecision candles. Remember, most of the candles I've shown you so far, single candlesticks in the chart pattern. So with these, you're better off you're better off in any period to let these settle down in any market. All the markets, technical analysis is the same, whether it's stocks, Forex, indices, commodities, crude oil, crypto, it's all the same. So I'll just show you some quick examples on here as well. Okay, so we're looking at the USD, JPY, Forex. So we're looking at the spinning tops here. So I'll just show you. Okay, I'll show you these ones here first. So as you can see here, there's quite a few of them. And because it's approaching resistance areas, there's quite a few there. And the decision, can you see the candles approaching resistance? So although the market's going up, it's not full. The bars are not full of a lot of buyers. It's approaching resistance. So if you look at the positive bar there, what I mean by the indecision there, after that, so it was going up positive. So if you entered there, the following day it just went down. The market just sold off. So it wasn't a positive signal there. So you lost, in terms of risk to reward, you've lost like tenfold of your position if you'd risked that much in that investment. So we look at bearish one here as well, which is, as you can see here, there's a nice uptrend. It's come in bearish. So if you entered to sell there, the market went up subsequently. So that's what an indecision candle is. Here's another example here where the market just dropped largely down. So these are basic indecision candles. Really, you're looking for something conclusive to form after that, a nice bigger bars or something like that. And then you can enter it in the trade, or you can see some down here in the bullish area. So you're looking at a few of them, and then you can get into the trade. Because usually when the price retests that, it does bounce back. Then as you can see, it's gone upwards form into a negative longer term, negative daily candlestick there. Okay, so let's move on to the next one. Okay, so we've got the Marabuzu. This candlestick's one of my favourites, and it's straightforward. It's usually when the market is trending. Like I said to you, and it's a continuation chart pattern. I showed you a lot of the other candlesticks so far, apart from the primary candlesticks I showed you at the beginning. A lot of the other ones are indecision, so it's not going to show the market as being trending, or they're not continuation chart patterns, which means the profit, so buying or selling is continuation. They look, the previous candles are like price has been struggling by buyers or sellers, and it might change course, it might stall, you won't be in, it's uncertainty in the trading area, whereas the Marabazu is straight selling. So as you can see, buying and selling. So as you can see in the bullish, it's a straight bullish buying position. There's no wicks in it, so there's just a high and there's just a top and a bottom. And in the selling, bearish, it's same. There's no wick. It's full of buyers. So that'll show that the market is, the liquidity is good. So there's a lot of buying and selling going on. So I'll just show you an example. Fairly easy bar candlesticks. Do experience. Sometimes if I use the word bar, that is another jargon for candlestick trading as well. So I'll just get another candlestick here. So I'll just show you some examples on here on where we've got bullish and bearish Marabazus. So we've got some good examples here. So I'll just show you whilst we're on. We're looking at 1 minute chart here, rectangle. So excuse me, that's so I just put there. So as you can see, the bullish bar there, that's called a Marabazu. So you'll be able to see the price prior to it. It's been pushing up on the 1 minute chart, and there it's formed there. So that's showing a straight upward trend there for you. So it's fairly easy understanding. I'll bring a bearish one up for you as well, just to make sure. We've got a few here, so I'll just show you the bearish ones. Okay, so we've got a couple there, as you can see, forming a downtrend after that indecisive spinning doji. So there you got selling pressure bar there, and you got some more selling there. So as you can see, it's full. So this is a really nice candlestick, and it's straightforward to understand on the chart system as well. Okay, so we'll just move on to the next one. Okay, so we're looking now at dojis. So there's different type of dojis. These are indecision candles where you say you're in a buyer's market, the price could be exhausting, and if you were in a selling market, there could be a trend change, a bearish market trend change. So the first one we've got is the long leg doji. The second one is a gravestone doji. And then we've got the dragonfly doji, and then we've got the full price doji. So just to make you aware, these are neutral candlesticks. So what it shows is the price finish flat, but sometimes you can get it forming in a positive color or a negative color. So it could be red, or it could be blue, or it could be red, or it could be neutral, which is why the price didn't move from that period. So that's how you've got it here. But like I said, it's an indecision candle, not desired in the trading, but it does give you signals as to that the market is exhausting. So I'll just show you an example on of all of them. So we'll just look at the index, the Japan 225, and as you can see on the chart, I'll just bring it a bit closer. So these are the examples we've got here. So also, as you can see, can make a bit of sense. It's quite illustrative. They're on the 15-minute chart, so you can see the long leg doji here. You can see some examples before as well. So we've got it here, and then we've got one example there. So that's what I mean by indecision. So the buyers were getting in and the price started to exhaust, and it's gone down to a bearish trend for that period. Then we've got some more buyers in. And then a dragonfly doji is formed. So we've got buyers in who push the price up. and then the dragonfly dojis formed. They couldn't get it any higher, so the period you see is as neutral. And then in the next doji, then you got some buyers coming. They push the price back down. It's gone into a bit of a range bound position around here. So you've got a bit of a range bound position. So the buyers have come back in. Then the 4 price dojis coming. As you can see, that's flat pricing for the period. So it's not the price has not moved either way, and that's ended flat as neutral. And then finally the price is pushed up, and then you've got a gravestone doji. The price has moved down and gravestone doji formed there. They've tried to push the price up. It's gone back down, and it's just formed right at the bottom as a neutral candle, and subsequently the price is pushed back down. So as you can see in the chart, it's fairly straightforward. The dojis are quite inconclusive. That was a range bound scenario. Okay, so we'll just move to the next chart. So like I said, I'm giving you a quick sort of update on these fast track guide to them. I do feel that in trading, application needs to be good, but you got to learn on fast track basis as well. So what that does is it shortens certain procedures. So we don't want to get into too many technicals, because over a period of time, over a lot of trading education programs, you start to pick up stuff over the weeks, months, even years in some cases. Anyhow, so back to the bullish candles plus doji and bearish candles with dojis. So as you can see there, we've got 2 bullish candles, 2 bearish, and both have got dojis. Most of them are sort of long leg dojis, and then short leg doji. So as you can see, it's self-explanatory in all the bars. So we've got a bullish candle there, and then we've got doji form. There's buying pressure to push the price up, but it's ended undecided. Then we've got a bullish bar with a long leg doji within the bar. So the price has ended within the candlestick. So it's inconclusive. And then the same with the bearish. The sellers have tried to push the price down, but it's ended inconclusive there. And then on the second bar, it's just more or less the same. Not the same thing, it's within the bar. So what you learn when you become a bit more advanced, you can trade within the candlestick itself on the high and low. So what you can do is technically buy a position that's from here and then exit it there if you've got some sort of formation. But that's quite advanced trading. Like we said, on the longer term trading patterns, you want to be trading with conclusive candlesticks, not sort of undecided candles. So I'll just show you an example of these. So I've got the Airbus NV up. So this is in the stocks area. So you can see there, bullish one with a doji formed inside. I'll just get a closer shot up here for you, so you can see there's on the closer shot there. So we've got long leg doji within that buying bullish bar. Then another one's formed within it, and then subsequently the price has dropped. So like I was saying to you earlier on, you may be able to enter the trade, but because it's inconclusive, it's ended up going down. There's been selling pressure onto it. Then we've got one here, which is a bearish with an inside long leg doji, and it's headed back down there as well. As you can see, this is although this chart's on a small time frame, you can see how important the actual dojis become, even on short time scales. So there you've got one here as well. So you've got one formed just above the candle, right just there, just slightly above, and it's resulted in bullish price action. Then it's gone back down. So as you can see in these scenarios that I've showed you, it's a very inconclusive. The dojis are very inconclusive, even with another bullish or bearish candlestick as you can see here, say you were selling, the price has still gone back up here, so it's quite inconclusive. So I won't recommend it as entry points. We can use it to study, setting a trade up, because it gets quite complex once you get in with these chart patterns. Okay, so now we're moving on to the hammer and hanging man. The hammer is a bullish reversal pattern, and the hanging man is a bearish reversal pattern. Okay, so we can see both of them are wicks at the bottom. So the wicks are quite long, so you can see the hammer most likely at a downtrend started to reverse, so buyers are getting in. Not a lot of them, but they've started to push the price up. In the hanging man, the sellers are starting to get in from the uptrend. The uptrend. So the uptrend is reversing into a downtrend, and that's where you get the bearish candlestick forming. So I'll just show you a couple of examples of them. So I've got one here. So I'll show you the bullish one there first. So as you can see there, we have the hammer there, basically near the hammer. So we've got a bit of a wick there, but the price has pushed up considerably compared to the side of buyers. So you can see there's been a couple of bullish bars, inconclusive, and then we've got buyers coming in. So this is on the 30-minute chart, and as you can see, the buyers have come in there and they pushed the price further up. There's been a bit of a retrace. Further up, it's gone down, and then it's gone up again. So it's on the uptrend, as you can see consistently. It's going up on the 30-minute chart. So I'll just show you a hanging man example as well. Okay, so we've got near hanging man example here, so you can see the same thing here. There's been an uptrend before, as you can see. It's quite a bit of an uptrend there, so it's resulted in a hanging man position there, and that's obviously the buyers have started to get out, and the sellers have got in. They've started to push the price down, and as you can see, subsequently the price is being pushed back down, and then there it is, nice little continuous 30-minute bars, several bars periods on the downtrend. So that was a nice trade that was. So I'll just move on to the next chart now. I hope you're not getting consumed or finding the program quite difficult. I'm trying to be as simple as possible. Okay, so now we're moving on to double candlesticks. Like I said earlier on, I showed you some on the long and short wicks and the primary candlesticks, but this is another reversal pattern here. So one's called bullish engulfing, and the other one is bearish engulfing. So what you see is, say you're on a downtrend, or there's some, you come on your support area, support and resistance. You'll learn about that later on as the programs develop over the coming weeks. So what you see here is the buyers have started to exhaust, as we discussed earlier on, and then a bullish bar's formed. And as you can see, the bullish bars engulf the bearish bar and it's taken over. So that's a sign the trend's reversing and bullish momentum's coming in. And consequently, say you're on the top or from a resistance area, and the buyers are decreasing in volume, liquidity is decreasing, and then what you see is a bearish candlestick forming, and it's got a lot of sellers in, and a conclusive selling continuous selling begins. So I'll just show you an example on that as well. So we just look at spot gold here. So we've got spot gold up here. So here we go. So that's the bullish engulfing pattern here. So I'll just bring that a bit up so you can see it. So we've got an indecision candle there, says there it is. So there's a bit of yeah, so we've got small candle there, and then the bullish candle is formed within that smaller candle, and then it's broken out, and as you can see, it's led to a big trend that's actually broken out, and it's gone on to quite profitable. I hope you and there we have. Okay, so now we're looking at tweezer bottoms and tweezer tops. As you can see here, we've got basically these are short-term reversal patterns, and as you can see on the tweezer bottoms, there could be a reversal occurring. So we've got a bullish candlestick, sorry, a bearish candlestick, and then we've got a bullish candlestick forming. And as you can see, the bullish may lead to the position reversing to the top side. And we've got a similar scenario with tweezer tops. So that's when the buyers are exhausting, as you can see on that, the wick. The buyers are exhausting, they're right at the bottom of the wick, and the bearish, or the sellers are getting in, so that bar's formed. Fairly straightforward in terms of trading. It's just a trend reversal pattern. I'll just show you an example whilst we're on. That top peak, excuse me there, so I'm just looking, I'll just get that up. So we're just looking at this chart here. This is Solana, it's a cryptocurrency. I'll just let me just quickly get this. Okay, so we can see here, so as you can see there, we've got here a reversal pattern forming. So we've got some buyers in this area that are exhausted, and then some sellers have come in, and as you can see, the sellers have taken over, and a bearish candle has formed. Fairly straightforward there. And then we've got the same on the other side here as well. So we've got some bearish candlestick here, and we've got some buyers. Shooting star and inverted hammer. So obviously the shooting star is a bearish candlestick, and the inverted hammer is a bullish candlestick. That's indicative, as you can see from the colours. So the shooting star would form in a trend reversal pattern. So say the price has tested a top or a resistance area. I was showing in my earlier candlesticks, that's when the price can reverse. And the inverted hammer is obviously showing there that the buyers have got in. There's been inconclusive price movement, and the buyers have still maintained the advantage. So as you can see, there's some buyers, so the next bar could be filling up with more and more buyers. I'll just show you an example on there as well. Just bear with me. Okay, so there we have. So here's the bullish hammer. We've got inverted hammer. As you can see, we're looking at the NZD JPY. So what we can see here is the buyers have got in, as you can see there, and subsequently, as I stated to you earlier, more buyers have got in and more buyers have got in before the market reversed. So as you can see there, it's had a bit of buying pressure on the downside, top side. But as you can see, the next bars continued from there. So nice bullish pattern that is. As you can see there was some sellers before, and then that's what's transpired in that move. It's showing you how sellers are getting out and how buyers are getting in. So I'll just show you a shooting star candlestick as well. Just bear with me. Okay, just one moment. Okay, so there we have a shooting star, which I said was a bearish, and it's a nice, as you can see what's happened here. The price has moved up, and then there's been a bit of resistance. It's rejected, and the shooting stars formed. So conclusive bar, as you can see on the daily candlestick. It's gone all the way down into a nice weekly trend there for you, at least a couple of weeks, at least 2 to 3 weeks of profits in a selling, in a sell market there for your long term. Okay, so I hope quite simple them two. I'll just move to the next one. So we've now got a morning star and evening star. So once again, this is a triple candlestick pattern. Earlier on, like I was saying to you, we've been through single candlesticks and some double ones. Now I'm showing you triple ones here. So here we've got a morning star, and then we've got the evening star. So it's fairly similar, just trend reversal patterns, as you can see. So what will happen is the bearish candles form, then it's running out. We've got an indecision candle, and then the bullish is formed. So for the confirmation code, the bullish candle has to be past half of the level of the opposite candle, so it's well past that there. And then vice versa on the evening star, you got similar, the bearish candles are past the indecisive doji. It's also gone halfway past that bar as well, so that shows clear signal on there, clear trend there for you. So I'll just get that up to show you. If you just bear with me, we'll just get this up. Okay, so we've got the evening star, and then we've got the morning star. So I'll just get this up. Okay, so okay, just bear with me. We just get the right chart. Make sure we're on the right chart. Just bear with me a few moments. Okay, so here we got an example. So we've got the morning star and an evening star. So there we can see bearish candle forming there, and then we've got one forming inside indecisive doji. Pushed the price a bit lower, but buyers have got in, and as you can see that bar, enough buyers have got in, and they've taken the price outside of the range, and it's broken out to a bullish pattern, albeit in a range bounce. So it's going higher highs, but quite a lot of buying and selling going on there. It must be approaching resistance area. That's just an example of that pattern. Remember, the candlesticks are not always exactly the same, they're always changing. And I'll show you another example here on a bearish one. So this is the evening star that I'm just going to show you there. So we've got candlestick there is formed. So we've got an indecision candle within there, and then we've got sellers coming in. So it surpassed that pattern basically, and then we've got another selling bar formed towards going down. So that, as you can see, there's a bit of a range bound scenario, but you can see clearly what's going on there. The price is pushing down with regards to that inside bar. So I hope you understand the terminology on that one. We'll just move on to the next one. So we've got 3 white soldiers, 3 black rows. So this is quite a straightforward chart pattern, and I'll just get the so what you can see there, buyers have got in there, and then subsequently more buyers have got in, so the candlesticks got bigger, and subsequently more buyers have got in. Nice. It's a bit like the Marabazu trending, nice healthy bars, straight with the correct signal all the time. So it's buy, buy, buy. The sell is the same. Sell, sell, sell. The sellers will get more as each period increases, and that's why you call it the 3 black rows on the bearish market, 3 white soldiers. These are nice simple patterns, good for traders, long-term trending market. And I'll just show you an example with regards to that. Okay, so I'm looking at the oil Brent crude. So we've got 3 white soldiers and 3 black crows, and there we go. So we've got a small candle by a bigger one and then a bigger one after that as well. So, or more or less the same size, or slightly bigger. There's more buying and selling in the top candle there. So the trend just gets bigger, and then we've got bearish one there, smaller one, and the next candles got bigger and the subsequents got bigger. So these are self-explanatory and basic, quite basic candlesticks. Okay, so I hope you understood that one. Okay, so now we've got 3 inside up and 3 inside down. So as you can see here, as I stated earlier in the program, that you've got bearish, so you've got buyers and sellers in here, but there's a wick formed, so it's going up and down. The volatility or the bearish is quite indecisive, but it's comprehensive selling. And then you've got some buyers coming in a smaller bar within that bar, and then subsequently you've got more buyers coming in, taking the bar to a breakout bar, which is passed through there, the candlestick, which will pass through there towards the north side of things. And then you've got 3 inside down. Similar, you've got buyers here that are exhausting, and then some sellers have come in inside that bar, and then you've got the third, inside the candlestick, and then you've got the third candlestick there, which is taken over both in size and then engulfed them, and that's what's called 3 inside down. So I'll just show you the examples on there as well. Okay, so we're just looking at some, we're looking at Beidou. That's just indice there. So there we have, so we've got bullish, we've got, a bearish candlestick there, and then some buyers have got him, as you can see, within that range, although the wick's gone out, but the actual period for that bar is within the previous bar. And then you've got buyers who come in, who've taken over and superseded both the end periods, broken out there. And then we've got another example here where you've got a bullish bar, and that's, you've got bearish that's come within range of it, and then subsequently another bearish, and that's taken over, and it's resulting in a downward pattern there. And as you can see, the price has subsequently filtered down. Once again, this is quite simple trading candlesticks, to use the triple candlesticks. So I hope you've been enjoying these candlesticks today, the program, and it is quite complex area. This is, so I hope you enjoyed part 1 today. Stay tuned for my next program, and I hope you enjoyed all candlesticks. Like I said, they will be available on my playlist. You can come on anytime and download the patterns. Thanks for watching. Please subscribe to my channel. Thanks, bye bye.